All right, here we go, guys. Happy Sunday. I know this is probably going to get out a little bit late, having a little bit of trouble trying to send these things here, adjusting some things on the back end, but I wanted to share with you a really quick study that really means a lot, and this means that the market could potentially be going lower before it goes higher. Now, anytime I say that to you, I want you to understand the stats behind it. So I've got the stats with me today, and know that if the markets do fall, I want to show you how every single time they have recovered, and we're actually going to give you the data. So here we go. Let's dive in. What happened recently in the stock market is that it fell over 15%, actually close to 23, I think, percent, in less than 3 months. That sparked our interest here and thought, well, is that unique? That seems really unique that that happens so quickly. So we went back and we looked at every single time that the markets have fallen, the S&P 500 has fallen more than 15% in a 3-month window or less. Then we went and studied going forward. What happened afterwards? And here's what you see on your charts. So for example, 1962, we'll show that one here in just a second. You saw a 25% decline, and in 10 days, the markets rallied almost 11% off the lows. So that's what happened in the markets. We fell over 15%, but then in the first 10 days, we rallied over 10%, 13.77 to be, and counting as we speak. And so that was really unique, a really sharp decline followed by an immediate snapback to the upside. So this is every time that it has happened, going back to 1945 actually, and here they are on the charts here. What this shows you, the little geeky spreadsheet here, it shows you how quickly it bounced in those 10 days and then actually going forward beyond that. And then we went through and said, well, what was the 6-month return after that? If someone were able to suffer all of that downturn, was it worth it? What was the return? And then most of us are long-term investors. So we said, what was the 1-year return if we were able to hold out through that downturn? Because I know a lot of you got to be concerned. You see such a sharp pullback in the markets, and although you know nothing's like bad's going to happen, it's just a bad time. It creates a little anxiousness. So here's the 1-year return. The really interesting thing I want to point out was, did the market make a new low first before continuing on its way? Let me explain. The markets fell from October to December, very sharp decline. They have now bounced off of that low. The question is, how many times did they fall all the way back down and go below that initial low? Hope you're with me here so far. And what you find out is 50% of the time, it actually fell lower first before continuing its rally. That lets you know there's probably a lot of volatility coming our way. So let's go for an example. By the way, the 1-year return positive 83% of the time with a median return of almost 18%. What that tells you is if you can hang on to that bucking bronco while things are crazy, you will be rewarded for your patience. Not an opinion, but actual stats, and this is some of the stuff that I just like to geek out on. So let's go over to 1962. It was March 1962 to June 1963. Here's what happened. The markets fell 25.39% in less than a 3-month window. They then rallied 10.83% in 10 days or less. Every chart we look at will have this. I'm not going to go over all of them, by the way. So you got a really sharp rally. Now the question is, when we bounced, did we then turn around at some point right here and cross under the initial low, that scary, scary low that everybody saw here? In this case, we did not. So if we go back to the spreadsheet, 1962, you got your decline, your change off the low. Obviously, you can see the returns, but we did not go lower than that initial low. So that's pretty cool. So going back to the chart, look at the rally that sparked, by the way. And I don't know if you studied before this. It's not like there was anything magical happening before this. But what I want you to notice is we did not just snap back off the low and then blast off to the moon and everything was fine. There were well, we got 4 months here where the markets decided they were going to wiggle around, bounce a little, fall a little bit lower, scare you, make you feel like we were going to go under the low, and then blast off when everybody was scared and sold their positions, blast off to new highs. I'm not going to go through all of them, but I did put a few together because I want to show you different looks of what could happen here. Here we have February to May of 1971. I highlighted it on the charts. We got over a 23% decline in less than 3 months. We had a 13% rally in less than 10 days. Look what happened. The markets pulled back and gave back almost all of that rally fairly quickly, right, within the next month and a half, then chopped around for a little bit, before continuing on its way, right? And that wasn't a great rally, but hey, look, you were rewarded for sitting through the pain of this that pullback. All right, if you're familiar with the markets, you know the Black Tuesday, right? 1987 here. And so here's the markets. Sharp, very sharp, 33% decline. That one, you should study that if you're ever interested in that. But nonetheless, 33% decline here and a 15% rally in less than 10 days. I believe it was only a few days actually that happened. But here's what happened. We did pull back immediately. We then shot back up, pulled back a little bit, and broke down under this recent low. Can you imagine the panic of investors when they saw this 33% cliff dive, right? Then thought everything was going to be okay for a little bit, only to see it go back to that scary level back down here. Incredible. But look what happened again. After everybody was scared out of their positions, all the retail investors, all the long-term investors, the market started on its path of a nice, strong rally to reward those that were able to hang in there for that one. Let's bump ahead here through the nastiness of 2000, the dot-com bust here as we started kind of falling apart 2001 to 2000s to 2003. There's actually two opportunities here where the markets fell. This one almost 20% less than 3 months. You had a 13% rally in less than 10 days. And look what happened. It rolled back over slowly, scared everybody out. Now, this took all year long to happen. So imagine the pain and suffering going, oh man, I thought we were done, only to see it fall again. Now, the same thing happened again. More than a 15% decline in less than a 3-month period, followed by a snapback of over 10% in less than 10 days, and that was what it took to finally settle down here and eventually start that rally if you study the markets going forward. But what I want you to see here is we did mark a low, very significant there, and when we fell below this low, we fell another 17% lower than this previous low. That was nasty, right? Again, did everything turn out okay? It did, right? The markets did recover, everything was fine, and so those who stuck with it or were able to invest through that downturn did quite well. Let's go to the financial crisis in here, take a look at some of the ones here. 2008, we've got this sharp decline of 30%, 10% rally really quick in less than 10 days, only to find out that it was going to break lower under all of that, but only briefly. You then have it was 10% lower than this previous low. So you watched 30%, you got a little break, you saw another 10% to the downside, took a little bit of a break, and then you had another 20% down from this low over here. What was that followed by? All of this chaos and panic, and you know it was all over TV. If you're old enough, you remember seeing all this. It was followed by the rally that has just seems to have been, troubled as of now, but that started this rally that took us all the way into where we're at right now, actually. So the point being, if you can handle these downturns here, you can handle those sell-offs, you may have to watch it go under this most recent low. Now, what does that tell you, though? Let's think about that. If you have a long time until retirement, what that tells you is you didn't miss anything, right? You very likely did not miss this bounce. I get a lot of people that say, hey, I wanted to invest. I had extra money I wanted to put in. Should I wait? Should I get going in there? What it lets you know is that there will be a lot of back and forth in this area. And so those of you that normally do X number of dollars a week and you wanted to bump that up, go ahead. You're more than likely going to catch a lot of downside here as the markets calm down. You didn't miss anything. You lump sum people that are looking to deposit, don't feel like you missed out. Don't chase it. Don't get excited here. If you're limited by the tax day, you got to contribute for 2018 before tax day, you can push it a little bit if you want to time your contribution. But know that you probably didn't miss out on anything, because as you see in that chart over here, there was often a lot of volatility before it ultimately started heading higher again. I really feel like that's what we're going to see this time. So sorry to scare you with the title of this email, but I do think that the opportunity to buy discounts, now I'm not going to say you should get scared and try to time when you buy and everything, but the opportunity to get money in at a discount is not past. You will see the markets pull back. That's my opinion. We'll follow up with this, but I hope this helps you. This was a little geeky. I just wanted to show you like the kind of things that we like to study here to make sure that we're doing the right things for you. This is nothing compared to what we do, but I want you to see how we actually study things and go, okay, we probably need to get ahead of this. We probably need to talk about what's going to happen in the markets considering history, because everybody has an opinion, but stats are what we're focused on. So I hope that helps, and we'll